Hello everyone, this is Andrew McNair from SWAN Capital with our Educational Economic Update for June 2017. In this month's video, we're going to be talking about some major headlines that influence markets in May. And we hope this information offers insight into what these developments might mean for you as an investor. Now please, always stay tuned at the end for a required disclosure statement at the end of this video. So the economy has sped up quite a bit since spring. See, in April, consumer spending increased 0.4%, which is its largest gain since December. Now, consumer spending was aided by rising incomes and tax refunds here in spring. Now, lower inflation did show us reflecting in the decreased oil prices, which gave us more money in our pockets as households. Now, if you look at the released Beige Book, which is a summary of economic conditions by the Federal Reserve, it showed falling prices for certain final goods, including groceries, apparel, and autos. So even with the curb in inflation, the Federal Reserve sent a very strong signal June 1st that it will raise interest rates in June and soon begin shedding $4.5 trillion in bond holdings. So it's very optimistic news for analysts. Now, experts do give little indication that the U.S. economy will grow its 3% growth rate that was targeted. See, we have healthcare and tax reform, as well as infrastructure spending that must be spent to improve our roads and bridges here in the United States. So even with all this uncertainty that we're seeing, the Dow, S&P 500, and the NASDAQ were all on track to post very large monthly gains. Now, the tech-heavy NASDAQ actually posted its 7th month winning streak, the longest since 2013, as well as the Dow and the S&P 500 all closing a little bit lower because financials dropped. Now, we're also looking at Treasury yields because Treasury yields have hung near 2.19% for the 10-year yield. Now they're starting to increase at 2.5% today. The other thing we want to keep a close eye on is the volatility index, which is the VIX or VIX, and it actually continues to look at the fear of consumers in the market, and it's at 10.4 right now, so we're keeping an eye on that. Also, the Consumer Confidence Index, which previously decreased in April, fell again in May. U.S. consumers are really still optimistic about the market, but they're falling more in line with what economists expected them to be in May. So the Consumer Confidence Index fell from 120 after hitting a real high at 125. We want to keep an eye on consumer confidence because 70% of the U.S. economic activity is based on consumer spending. So in the coming month, we're going to keep a close eye on the second quarter. You know, a lot of economists are all over the place regarding how much improvement we're actually going to see. So the overall outlook is expected to improve though. So we're going to keep you up to date on these changes. We also want to keep a close eye on the Paris Accord and on how that's going to affect our relationships with other countries, including our trade policies. So if you have any questions about your personal plan, don't hesitate to schedule a review or call us if you have any questions. Now that's it for this month's Informational Economic Update. We're going to see you again in June, and definitely as a client, you want to RSVP as soon as possible for our July halftime report. That's going to be July 17th at 6 o'clock here at our office. Again, RSVP by calling the office at 850-380-9558. Once again, this is Andrew McNair from SWAN Capital signing off for the month of June 2017.